Okay, folks, so in the wake of the Biden student loan forgiveness decision and the announcement of when the moratorium ends, I want to discuss Sofi. How will the student loan decision affect them? And is Sofi a buy at these prices? Should you get in before the loan moratorium ends? Timestamps below will be discussing all of these things. But first, a word from our sponsor, Moomoo. And their up to 13 free stock promotion that gives you 3 more stocks than the regular 10 free stock promotion if you sign up and deposit and meet certain requirements using our link down below. This market is ruthless, and so you better be prepared with the best tools behind you. You better have a platform that allows you to do top-tier risk versus reward analysis on the spot, gain rapid insights, and of course help you find and execute on effective strategies. Folks, you need a platform built for elite and active traders just like yourself. And that is where Moomoo comes in. Moomoo helps you monitor market movements, perform deep technical analysis, quickly screen for stocks that meet your criteria, and also provides a community where traders can exchange ideas amongst one another. Moomoo offers crucial features such as fast fills, AI monitors, AI price predictions, heat maps, stock compares, and of course, candlestick screening searches. Moomoo is a one-stop trading app that makes it easy for traders to do everything they need to get that extra edge on the market. If you are looking to step your trading game up to the next level, be sure to give Moomoo a look. And we've arranged where if you sign up using our link down below, you'll get up to 13 free stocks. That is right, folks, up to 13 free stocks to sign up via my link and try out an excellent broker and trading platform. Thank you, Moomoo, for sponsoring this video. Now back to the content. Okay, so let's go in and talk student loans here. So you pull up Sofi's latest filing. They own $3.2 billion in student loan debt payable to them. Securitized student loans are at $466 million. Obviously, these units are in thousands. But if you look at their overall loans owned, they own $7.9 billion total, which means that more than 45%, almost half, of their entire owned loans payable to them are specifically student loan based. And really, before the pandemic, Sofi was essentially a student loan company. And then all of a sudden the pandemic hit and the government pretty much completely froze their industry. And you could see the direct dump in new student loan originations after the student loan moratorium went into place. Just looking at this, you can imagine that when the moratorium ends, you'll at least start seeing some momentum to where it was pre-moratorium, right? It might not get back there right away because of the things I'm going to mention later on in this video, but you can definitely imagine that if you've completely closed off this market to a huge degree, well, all of a sudden, if you start opening it again, this should start ticking back upward pretty fast. Now, of course, it's very, very important to understand that Sofi is a private lender, right? So it's not public, which means that the federal freezes and moratorium and so on and so forth doesn't apply to what Sofi has. If you currently have a loan at Sofi, that loan won't be affected by the forgiveness. If you had a loan throughout the pandemic, well, that loan was not frozen. You still had to pay towards it. But the Sofi business model works on new refinancing and bringing new loans into their overall ecosystem. And what motivation has there been for borrowers to refinance if their loans have been frozen quarter after quarter after quarter, if they think that there's a dangling fruit of forgiveness on the horizon? Nobody is going to refinance, especially to a private company, if they think that all of a sudden there's a massive forgiveness plan coming. So in order to understand how this forgiveness plan is going to affect the FI of SO, you have to go over and look at what the plan is. You get $20,000 in forgiveness if you went to college on Pell Grants, $10,000 if you didn't receive the Pell Grants. Based on my research, it seems like around a third of students get Pell Grants. And then the other criteria is that you can only get forgiveness if you are earning less than $125,000, and this extends the overall student loan pause on payments until December 31st, 2022. And then you have this new line here where for undergrad loans, they cap repayment at 5% of an individual's monthly income. If you make $4,000 a month, 5% of that is like, what, $200 a month. So that means that you're capped at $200 a month. Versus before, you could be paying $600, $700, $800, right? Which would obviously be a big problem. Now, there's good and bad for this with Sofi, right? And you could probably already see what the bad is. Well, the bad, it's pretty obvious. If government forgives a ton of loans in the amounts ranging from $10,000 to $20,000, well, Sofi's total addressable market is much lower. There's a lot less loan funds out there that Sofi can help refinance. The bulk of Sofi's loans pre-pandemic originated from people that had federal student loans. So certainly if you knock out a chunk of that debt, well, the addressable market goes inward. But take a moment to listen to what the chief executive octopus over at Sofi said during an earnings call in May. Quote, "If there is some level of forgiveness, 10,000 and below, I think it would be great for our business, blah, blah, blah. There is a cohort of people that have been waiting and waiting for student loan forgiveness, and they have not refinanced." You have all these people, like I said earlier, who are waiting and have not refinanced, right? And that's in our demographic as well. Once there actually is forgiveness, there is nothing to wait for anymore. So here they're saying, wait a second, there's a carrot at the end of the stick. Sure, there's some forgiveness. Sure, the pause is continuing on to the end of the year, but now we finally have a carrot at the end of the stick, and all of these people that were waiting for forgiveness are now going to say, okay, well, we know what's going to be forgiven. It's been forgiven. Now it's time to refinance the rest. All of a sudden, you got the market opening up again, and this is from the chief executive octopus. According to educationdata.org, the average federal student loan debt balance is $37,667, while the total average balance, including private loan debt, may be as high as $40,272. So if you are the average borrower who just had $10,000 forgiven from your total balance at $40,274, you still have like $30,000 left that you owe, right? If you had a Pell Grant, maybe you have $20,000 left that you owe. So it's like, sure, yes, some of that debt is forgiven, but Sofi now is going to have access to all of these clients that still have debt left to refinance. The last 2 years, Sofi had access to none of these people because they were all waiting. Now they're not going to be waiting anymore. Going back to the octopus, he said prior to the pandemic, our student loan refinancing business had an average loan size of about $70,000. So again, if their average customer is consolidating and refinancing $70,000 worth of student debt with Sofi, even if they have the $10,000 to $20,000 forgiven, that's still a huge market left to address, which again, has essentially been frozen the last 2 years. So in total, I would say yes, this decision is bad for Sofi in the sense that it weakens the overall market size for Sofi's refinancing product. A chunk of the market will be obliterated by this forgiveness, and federal loan rules, for example, a cap on repayment at 5% of monthly income, will drive away some of the people because the private loan market isn't going to have that kind of cap, right? But at the end of the day, Sofi should still see a substantial boost in demand from the majority of the market of refinancing potentials who are left. And so net and in effect, after this forgiveness goes through, there's still going to be a massive market for Sofi, one that it hasn't been able to attack for the last 2 years. Not to mention that this executive order, quite frankly, does nothing to address the core problem, right? Each year there will be a new group of suckers, students, who will be going and borrowing more and more money. According to fined.org, on average, tuition tends to increase about 8% per year. An 8% college inflation rate means that the cost of college doubles every 9 years, which means what? Student loan debt is going to continuously balloon, and there's going to be a bigger and bigger market. But with Sofi, the way that I look at it is that before COVID, Sofi was mostly a one-pillar business, and that pillar was what? Student loans. But now in 2022, there's many different pillars. Student loans are still a key pillar that have been dragging down the top and bottom line for the last 2 years, but the other pillars have taken more weight. You now have a massive personal loan segment, which you didn't have before. You have a home loan segment. Outside of that, you also have a growing technology platform segment, Galileo, which provides a digital payment platform for other fintech companies. And then you have the financial services segment, which arguably is one of the more exciting metrics for future growth of this company. You look at the growth of new members. As of Q2, you saw 450,000 new members, which is 69% year over year. This is a quarter where financial conditions tightened. Keep that in mind. Most financial services company, and especially fintech as a whole, overall, I should say, did badly. In terms of products, Q2 was the second highest quarter for new product. In terms of their Galileo platform, they've reached 117 million accounts. 117 million, folks, that's a lot. And the pace of lending product expansion is accelerating and likely will continue to accelerate when the student loan market really reopens. So with Sofi, basically, I see a rapidly growing company, at least business-wise, certainly not stock price-wise, with a major pillar of its business about to reopen. I also see a share price that's been beat down like crazy, mostly because of financial conditions this year, but also because, hey, again, it's a student loan company that has turned into a fintech bigger loan, personal loan, credit card, savings account, Galileo, API payment processor company with a bunch of other different things thrown in between. But still, one of the core pillars is missing. So people are like, hey, don't want to touch it. We don't know what Biden's going to do. Now we know what Biden's going to do. And I think that SoFi deserves at least a little bit of a relief rally on that. But I also believe that over the long run, this point is going to age to be an incredible, incredible price. That said, like I was saying also a couple days ago, I also believe there's going to be another Fed rug pull ahead of us as inflation continues to be a problem for at least a couple more quarters. In that case, you can certainly see downside back to the 4s on SoFi, maybe even lower, but I think probably somewhere around the 4s is where you bottom. SoFi isn't going to be a popular stock again for at least another quarter or two. But I think that probably after Q1 of 2023, after you get that report and you see SoFi in full action again after all of that new demand from refinancing that has been held up and pent up the last 2 years comes and benefits them, I think that when markets look at that quarterly report, they're going to be like, oof, SoFi looks like a great deal. Hey, at the end of the day, I get it. You can make an argument for why you shouldn't buy any stock. But sometimes when it comes down to long-term fundamental plays, it makes sense to just have a radar of different stocks that you are looking to buy so that when you get the best deals possible, you can take advantage. What you don't want to be is in a situation where all of a sudden things have dumped another 20% and you don't know what to buy because you haven't done the work on any of them. So anyways, hopefully this video was useful for you. Let us know what you think down below. Make sure to hit that ravishing like button and subscribe button. Get your up to 13 free stocks with Moomoo. Thank you again to them for the sponsorship. And finally, if you want to get 50% off our ZipTrader program, access to our step-by-step lessons, daily morning briefings, full price target list, and so on and so forth, I'll go ahead and put a link below. Coupon code recession50 will get you that 50% off discount. But keep in mind that that does expire on Labor Day, which is September 5th. Have a good one, folks, and I'll see you in the next video.